The following program is furnished by K1 International, LLC, and is responsible for its content. Now, from the fifth floor Cumulus Studios in downtown Dallas, it's time for Inside Real Estate. Here's your host, Michael Kruizinga.
Good morning, Texas. How we doing? Welcome to your Sunday morning. Time for a little real estate, business, sports, entertainment, politics, all kinds of good stuff here on the show. As you know, we're here every Sunday morning, 8 to 9 a.m. By the way, the website is InsideRealEstateRadio.com, InsideRealEstateRadio.com. And if you want to talk to myself or any of our experts in industry up here this morning, hey, the number is 888-787-KLIF, 888-787-KLIF. By the way, don't forget all of our past episodes are on the website. You can go to SoundCloud or to iTunes. You can click over to all of that from the website at InsideRealEstateRadio.com. There's the archive page. And then, of course, keeping up with all of our stories and all the things that we do, you can go to Pinterest, Facebook, YouTube, and all of that good stuff. So feel free to join in on all of that and catch up with us with all of that. Our app, if you're actively looking for real estate right now, is actually a really good mobile phone app, mobile device app. It is DFW Metroplex Real Estate. And the nice thing about this app is if you are actively looking for real estate, there's not a lot of ads or pop-ups or any of that nonsense. It's my own personal app for my real estate operation. And so you don't have to worry about any of that advertising nonsense. So if you are actively looking, check that out. There you go, DFW Metroplex Real Estate in your smartphone app store. So there you go. We got a lot to do here in the show today. We've got some insurance talk. We're going to be talking about deductibles with Richard Tonica over at Goosehead Insurance. We've got our legal analyst, our expert attorney here on the show, Perry Cockerell, and we're going to be talking about why title insurance is so important. You know, the whole industry of insurance overall, don't get me started on it. Sometimes it frustrates me outside of the fact that, you know, we've got our own advocate here with Richard who helps us in all things insurance, home, auto, and otherwise. But
I make sure that my customers don't go through what you're going through.
Exactly. So, but hey, title insurance extremely important. So we're going to talk to Perry about that, and really, honestly, probably one of the most important types of insurance, really, because it, you know, along with homeowners insurance, is extremely important because it has everything to do with your biggest asset.
Yes, anything tied to your home. Oh, my goodness. You've got to take time to actually read what you're paying for and what you're getting.
Yeah, absolutely. No doubt about that. Then we're going to probably get into a little bit of mortgage talk. And actually, Jared from PermaPeer Foundation Repair is supposed to be here today, too. So hopefully we're going to get to talk a little bit of home improvement and foundation repair with Mr. Jared. Hopefully he's going to make it in today. So we will hopefully get to that. I want to talk to you about a couple things real estate wise. You know, when you're thinking about putting your house on the market and you're thinking about, you know, what type of agent that you want to have, there's a lot of agents that don't manage negotiation very well, and they don't manage offers very well. You know, there's a sort of a standard protocol, if you will, in the industry with offer management and negotiation, and then there's people that just have no idea. You know, they're a deer in headlights when an offer comes in. They don't know what to do. They don't even honestly know how to read a contract. And that's obviously a real problem for you if you're trying to sell your home and get top dollar and or try not to lose an offer that comes in, you know, because if you all of a sudden you got an offer that comes in, hey, that's a fish on the hook, you know. Now, can you keep that fish on the hook and get it into the boat? Totally different story. So,
and that's one of the things that I always talk about. You do not want to teach your real estate agent how to do their job.
No.
You don't want to be the person that they learn with.
No.
But having a lot of history in the industry doesn't mean that you know what you're doing either.
Yeah, that's absolutely right. And that's why I always say, you know, really look into who your agent is going to be and ask them questions, get a little bit of information and ask them questions and, see what they talk about. So for example, we run into agents And, if they get an offer or more than one offer, it's like all of a sudden they get just their mind just goes to mush because all of a sudden they're just thinking, how high can I get this price potentially? And it's almost like they're looking at it more from a self preservation, self gratification where, can I get
how much commission can I get?
Exactly. Instead of managing the offers and really engaging with your seller and bringing them into the situation. How many agents, talk on behalf of their client, which they can, assuming they have had that discussion and had, the sellers told them, here's what I want you to do in these cases. If you've had those discussions in advance, that's fine. But if you haven't had those discussions and you're just acting on your own accord, that is not a good thing. So offer comes in, you talk to the seller. Here's what the agent on the other side needs to get from you. And here's what you owe the agent on the buyer side and the buyer. You owe them a response, and you owe them a seller response, not your response as an agent, okay? Unless you have been specifically directed as the seller's agent to act in this way based on these type of circumstances that are presented to you. Most listing agents aren't going to go into that type of detail in advance. They're going to get the listing on the market, and that's about it. And then they're just going to wait until an offer comes in and deal with it at that time. But you need to talk to your seller, present the offer to the seller, and, prepare a response. And generally in a response, look, we want to reject, we want to accept, or we want to counter. And you can even do a sort of a soft rejection.
Yeah.
Hey, thank you for this
on this and this and this.
Exactly. Thank you for this offer. We really appreciate it, but it's so far out of the ballpark, we feel like we can't negotiate it. Now, we would really like you to submit a new offer that we can negotiate. That's a soft rejection. Reject, accept, counter. That's what we're looking for. Now, if you get into negotiating a deal, it doesn't mean another deal comes in. You can't negotiate that deal. So many agents get confused on that they can't negotiate more than one deal at a time. That is completely fine. And it's actually in the best interest
of the client,
of your seller. But you, as a listing agent, if you can't mentally handle this, you have no business being in that position at all. And you're doing your client a disservice. And you're not handling your fiduciary responsibility to even the buyer's side. So it's a real problem all around. In particular, let's say in theory you've agreed to things, but you haven't signed it all, and maybe a day has gone by. If you're not fully executed and another offer comes in, you need to present that offer to the other client, to your seller client, and say, hey, we've got another offer in. We're not executed yet. Do we want to negotiate this offer? How long do we want to wait on the other one, et cetera? We can tell them, hold off. Another offer's in the game.
Uh-huh.
And then not that you necessarily are trying to play one off of the other as a seller's agent, but as a seller's agent, you do want to get your client the best. And just because you're, 9/10 of the way done with one deal and one deal comes in, doesn't mean you shouldn't discuss that new offer with the client, with your seller client, and figure out if you can negotiate that one as well.
But the best isn't always the highest.
That's true. There's a lot of things, and that's what the seller needs to know. What if they're getting into a deal with a client who's only putting, 5% down, and they're 9/10 of the way done with that deal. A new offer comes in, someone's putting 20% down.
Yes.
30% down. That's probably the stronger offer, not in all cases, but it could be. And that's why that as the seller's agent, you have got to talk to your seller client. You can't make these decisions on your own without specific instructions from your seller client. And if you're withholding information from your seller client, you are not doing them an absolute disservice, and you're doing a disservice to the other side as well. So I want to bring that up because that does happen a lot, and there's a similar case of that happening recently. And so I wanted to bring that up. And, so if you're evaluating who you're going to have as your seller's agent, you really, really need to think about.
You need to think about Mike.
Well, yes. I would definitely strongly think about me. You could give me a call. We'll absolutely take care of you. Absolutely, we will. I guarantee you this. We're going to talk every step of the way, and every time an offer comes in, we're going to talk about it, and we're going to evaluate it and evaluate the best way to go. It's just like, how many times will a seller's agent say, oh, we have 2 offers, multiple offers, give us your highest and best. And then one of those offers just drops off because they're like, we're not playing that game.
Exactly.
The asset managers for REOs, they can do that, because their homes are generally priced, a little bit more competitively, a little bit lower. A seller's agent, unless you got 5-10 offers, look, that's one way to do it. You get 2 offers trying to go multiple offers, even 3, and you might lose 1 or 2. That may not be the best way to go for your seller client. And then all of a sudden you're like, okay, well, now we only have 1 to negotiate.
Well, let's say you even have the 5, and then the price goes up and it doesn't actually meet appraisals. Then you're starting from square one again.
Yeah, absolutely. Well, I just want to throw that out there to you. Think about who you're bringing in as your agent, folks. Hey, I've talked about this a number of times. Randy Addington is the owner of Hydrojet Walk-In Tubs and a good partner of the show and has an amazing product, folks. If you have mobility issues or of someone who has mobility issues, that just the basic functions of getting in and out of the shower, getting in and out of the tub can be extremely difficult, not only on you, but also maybe loved ones. And a way to combat that is to go with a Hydrojet walk-in tub. Lowest step in the business, we're talking about 1 inch to walk in and walk in out of the tub. That's exactly what you want. How about a real product that's made in the USA, not just assembled in the USA, not that they say it's made in the USA, absolutely made 100% here in the USAA, and generally under $10,000. Now, most of the competitors are going to go $20,000, $30,000 for this product, under $10,000 installed. And by the way, for veterans, doesn't matter whether you're a disabled veteran, active veteran, inactive veteran. If you're a veteran at all, there's a grant that can get you this product. And Randy goes through the entire process. It's about a 6-month process to get this done, but he goes through that process for you to get it. So if you're a veteran, you can actually get this. And trust me, hydrotherapy goes a long way, if you've had an injury. So think about that. HydrojetWalkInTubs.com is the website. Hey, folks, we're going to take a short break. Come on back. When it comes to your mortgage and refinance needs, trust Terry Wagner, our resident mortgage expert on Inside Real Estate Radio. With a wide range of financing options and competitive interest rates, you can trust Terry for a fast and reliable loan process with superior service. Go to terrywagner.com or 469-644-4818 today. Supreme Lending is an equal housing lender. NMLS ID number 207089, 6730 Horizon Road, Suite B, Heath, Texas, 75032. SML Mortgage Banker Registration, Residential Mortgage Loan Originator. Folks, it's Mike Kruizinga here with Inside Real Estate Sports Entertainment on 570 AM KLIF. Did you know that virtually all of us will experience a fall in the bathtub at some point in our life? Well, statistically, it's true, and as we get older, a fall in the bathtub can spell disaster, as we just can't recover the same as we did in our younger years. Don't let something as silly and preventable as a bathtub fall put an end to all your special plans you have lined up for your golden years. Invest in a Hydrojet walk-in bathtub. Made in the USA and with the lowest step in the industry, Hydrojet walk-in tubs has your best interest at heart. With no commissioned sales staff or huge warehouse overhead, they build and sell direct to you, saving you thousands of dollars over their competitors. Call Randy, my friend and owner of Hydrojet Walk-In Tubs, at 855-980-8827 or go to hydrojetwalkintubs.com. You'll be able to speak with Randy directly, and make sure to mention you heard about it on the radio. And for you veterans out there, there's a grant available for you to cover the majority of the cost of a walk-in tub, making it darn near free. Call Randy at 855-980-8827 or go to hydrojetwalkintubs.com today.
Now back to Inside Real Estate. Here's Mike the Realtor.
Hey, folks, we are back. Website, InsideRealEstateRadio.com, InsideRealEstateRadio.com. If you want to talk to us, 888-787-CLIFF, 888-787-CLIFF. Hey, folks, we've all heard of someone that has had an issue with timeshares. We've all heard the horror stories. If you've ever sat through a timeshare meeting, maybe you just wanted to get something free and you went in and you listened to the timeshare deal and somehow you got suckered in because, after 6 hours of a beatdown, you said, fine, where do I sign? And then you said, how can I get out of this afterwards? And then you find out you can't get out of it. You know what? The timeshare contracts are by and large, ironclad. Not only are they ironclad, just because you die, that doesn't mean you get out of your timeshare. You would think, I'm dead, I get out of it. No, there's somebody surviving you, a spouse, a child, a next of kin. And guess what? Your estate cannot be settled if you have a timeshare, and it's not passed on. So
that's the reason I'm not leaving anything.
Taking it all with me. So do you want to leave, a spouse, a loved one, this type of issue holding up your estate? No, you don't want to. Or if, you're far away from that potential, you're early on in life, but you got suckered into a timeshare. Now you want out of it. Or maybe even you've enjoyed a timeshare for 20, 30 years, but now you want to get out of it. Hey, the folks over at Lone Star Transfer right here in DFW, the owners are Brian and Karen Holloway, and they're going to get you out of your timeshare. Now, they're not one of those companies that's going to scam you and say, oh, we're going to get you out of your timeshare in 6 weeks and, pay us this, that, and the other. No way, no how. Look, bottom line is, you know how ironclad these contracts are. You've tried to get out yourself. You can't. The process really takes about 6 months to a year to get out of your timeshare. But Lone Star Transfer can get it done for you. Absolutely. Go to LoneStarTransfer.com and look up all the information, check out the reviews, and then give Brian and Karen Holloway a call, the owners, and they're going to get you taken care of. So if you want to get out of your timeshare, you know somebody that wants to get out of their timeshare, it will be a process, but you want to get it done right. Lone Star Transfer will get it done. LoneStarTransfer.com. Hey, folks, now it's time to get into a little bit of insurance talk. We're going to talk deductibles, as we talked about. We got Richard Tonica right here live in studio. His website, richardtagency.com, richardtagency.com. What's up, Richard?
Woohoo, way to go, me.
Yes, you.
How's everybody doing? Let me first start off by saying thank you to everybody in this Thanksgiving season. Let me be the first to wish everyone a happy Thanksgiving. I hope we all take a moment to really say how thankful we are about the things that we have and where we are in our life, and get on our way to get to where we're going. So anyway, that being said,
absolutely, a lot of travel gonna be going on, and everybody be safe.
Well, even during the lean times of the Tonica household in years past, this was one of the times of the year that we made sure that we went out and gave back, because there's always somebody worse off than what you are.
Absolutely.
And speaking of that, we're going to jump into insurance talk.
There you go.
Because the whole thing about insurance is making sure that all your assets are covered. And if they're not properly covered, then you are going to be worse off than what you were before the accident. So it's making sure that you have the right policy at the right price, but also looking at what we're going to concentrate on today is deductibles, because deductibles are going to play a major part of what you're going to pay and how often or if you put in a claim. Because the lower your deductible, the reason that the rates are usually higher is because they know, or the insurance companies know, that you're going to put in more claims. There's a reason that you want a lower deductible. It's because usually those people do not want to come out of pocket anything, and so anything that pops up, and they're going to put in a claim. And when we're talking about deductibles, there are percentage deductibles and there are traditional deductibles. Percentage deductibles. Let's say that your house is $100,000 house, because we got to keep it simple for my math. So you have a 1% deductible on your house. So anytime some kind of covered risk happens to your house that's more than $1,000, you can put in a claim. Would I advise you to? Absolutely not. It depends. Well, it depends on what kind of claim it is. First, we do our due diligence. But that being said, we look at how much your deductible is and how much the estimates are to repair it. Now, what I normally go by is 2 times the deductible is when I put a claim in myself. That's where I feel it's financially, I'm being financially responsible, and I'm not being frivolous with my claims. Because the more claims that you put in, obviously the higher your rate is. depending on if it's characterized as a catastrophe or not. If it's non-cat, those claims can add up quickly, and they really can affect your rate. If it's a cat-related incident, like a big hailstorm or something like that, those things do not affect your rate for some carriers. Other carriers, they're still going to penalize you for it, even though you couldn't pick up your house and move it out of the hailstorm's path. So, if your house is $100,000 and you've got a 1% deductible, anything over $1,000. So those people, if that's what you're living in, you might look at a 2% deductible. 2% for someone coming out to do some kind of work on your house is not that big of a deal for them to. Now, I can't ever have the conversation with them about if they will work with your deductible or not, because I don't want to have my license taken away. But if you had it, I mean, $2,000 out of pocket to get something repaired is not that big of a deal for most people. So the lower your home dwelling is, because on your house, when you're looking at percentage deductibles, what you're looking at is the value of the replacement cost for your home, the dwelling, coverage A. So it's $100,000. If you have 2% deductible, $2,000, not that big of a deal. When that starts becoming a big deal is when you get $300,000, $400,000, $500,000. Now you're looking at, okay, if it's $300,000 and you've got a 1% deductible, you're going from, you have $3,000. If you have 2% at that dwelling price, now you're doubling up $6,000. That's a bit harder to swallow. And so the higher your value is of your home, that's when we're looking at, you might not want to do this. Maybe 1.5 if the carrier actually offers that. A lot of them don't. Or going to a fixed deductible, or the traditional, where you have $2,500 or $5,000 and doing something like that. But it's really, when we're talking about giving you a personalized policy, it goes all the way from the coverages that you select, the endorsements that we add, and the deductibles that we add to your policy, because what your risk tolerance is different from Perry's, and it's different from mine. And so I know people that all they want is absolutely total loss, and that's it. And he had his house paid off, so he wanted a 5% deductible on his house. I was like, I personally wouldn't do it. But if you want to do it, that's your decision, and I'll do whatever you want, because at the end of the day, it's your policy.
Right.
But if you have a mortgage on your house, there is absolutely no way any mortgage company is going to let you have a 5% deductible. You're lucky if they're going to give you a 2% deductible. And it's something that we work with a lot of people is, where are you in this whole cycle or the home purchase life? Do you own your home outright, or are you making payments? Because if you're making payments, we know that we're either looking at 1% or 2% deductible, or if it's a fixed amount, because there are companies out there that will, I don't care how much your house is, they will let you have a $1,000 deductible or a $2,500 deductible. You can have a $300,000 house and have a $1,000 deductible, which is unheard of, but it happens. Are you going to pay more for that policy? Yeah, probably.
Yes, yeah. Absolutely.
It really depends. I mean, there's a lot of factors, and we'll get into how some of the homes are priced, but it really matters on a lot of factors. But I mean, that 1% or the $1,000 deductible for a $300,000 house, the $1,000 is going to be more than the 1%, but it still may be less with this company A, over any other company that has a home policy for that particular house, even with the same endorsements and everything else.
Right.
And so it's going through there and looking at all that is how we determine what is the right policy, or we don't determine it. The customer determines it. I just give them all the facts that I can.
Yeah, and you give them all the options. The important thing to think about is, people view homeowners insurance in particular in a very narrow view. They're like, okay, we got Farmers, we got Allstate, we got State Farm. You have to go to a big boxer, and you just get whatever policy they offer, and they're just going to shop the rate.
Yes.
But they don't understand insurance behind the scenes, which is where you come in, because you shop the 25 plus companies behind the scenes. They're companies that the consumer can't even get to. And, these are the companies that often insure the big box companies in some cases. But you go behind the scenes and you get the options for them. You break down the policy into a number of components, which they can say, okay, where's your risk level for this? How about this? How about this? And then you get into the information about their home. Do you have a lot of trees in your home? Do you have outbuildings? Do you have all these things? Are you at the top of a hill? Are you at the bottom of a hill? All of these types of things that Richard talks to you about, and then figuring out what's the best policy for you and getting your risk tolerance, and then getting you a great price. You don't want to just shop price when it comes to homeowners insurance, because honestly, do you want to insure your biggest asset, or not? And do you want to be covered when something happens? If you just want some lowball price and some generic policy, well, guess what? You're going to be, at least we're going to tell you, hey, you're going to be in a very, very, very bad position should something happen, which the big box guys aren't going to tell them. They're just going to say, hey, here's the lowest price, take it and run, because they know more than likely you're not going to look at your homeowner's insurance for another 5-10 years.
I made my sale. I've got these. I've hit my quota for this quarter, and blah, blah, blah. That's something that we don't do. We're not concerned with that. We're concerned that making sure that the customer is taken care of. In fact, there's one customer that I've been working with for a while, and he did exactly that. He shopped all on price. Didn't realize what kind of policy he had until I sat down with him. He finally showed it to me, and I was just like, okay, this is the reason that I'm not going to touch this price, because I'm offering you this, and it's worth this, and this is what you have. And I showed him everything that it didn't cover, and he was absolutely floored. And because other agents haven't taken the time to show him exactly what he's had, and he's had 2 or 3 agents that have had him with the same policy, and that's the hardest part, is if something would have happened, he absolutely would not have been covered. And finding out that you're not covered, or you're not covered at the level that you think you are after the fact, is the absolute wrong time to find out.
It's the worst feeling. And unfortunately, the consumer has made it easier on the industry to sell them a policy, because they've decided to only look at price, which is really only a piece of what the puzzle that you should be looking at as far as insuring your home, which is your biggest asset. So go above and beyond, folks. Give Richard a call. First of all, go to his website, richardtagency.com, richardtagency.com. Look at all of his information, then give him a call. He's going to talk to you, go through the entire process with you. Hey, by the way, he covers everything, home, auto, toys, the whole gambit. He will take care of all your needs. By the way, he can bundle all of your different needs, even with different carriers. Your big box person cannot do that. Give Richard a call. Richard Tonica, richardtagency.com. Hey, folks, we're going to take a short break. See you in a few. Far from the shores of home, 2 African-American U.S. Army privates fight for their lives on the battlefronts of World War II. The first Black War correspondents fight to cover the perspective of the black soldier. The novel A Private War, it weaves all this and more into an epic World War II era story of friendship, conflict, religion, and redemption. Get a copy of Private War, a novel by Perry Cockerell today, now available on Amazon.com. And tune in regularly to Inside Real Estate Sundays, 8 to 9 a.m. to hear Perry Cockerell, attorney at law, as he provides expert analysis of the latest and greatest in legal news. When it comes to your mortgage and refinance needs, trust Terry Wagner, our resident mortgage expert on Inside Real Estate Radio. With a wide range of financing options and competitive interest rates, you can trust Terry for a fast and reliable loan process with superior service. Go to terrywagner.com or 469-644-4818 today. Supreme Lending is an equal housing lender. NMLS ID number 207089, 6730 Horizon Road, Suite B, Heath, Texas, 75032. SML Mortgage Banker Registration, Residential Mortgage Loan Originator.
Living in the DFW area, expansive clay soil and extreme weather conditions play havoc on homes' foundation. But thankfully, you can turn to Perma-Pier Foundation Repair of Texas, who has successfully repaired over 20,000 properties and counting in the DFW area. With the most trusted, tried and true foundation repair methods, trust the professional staff of Perma-Pier Foundation Repair to take care of your property, and most repairs are backed by a lifetime transferable warranty. Mention Inside Real Estate Radio when calling Perma-Pier at 214-637-1444 or when booking online at permapier.com for your Inside Real Estate Radio discount.
Now back to Inside Real Estate. Here's Mike the Realtor.
Hey folks, we are back. It's Inside Real Estate with Mike Kruizinga. Website InsideRealEstateRadio.com, InsideRealEstateRadio.com. Time to talk a little bit of finance and business and mortgage with Miss Terri Wagner over Supreme Lending Rockwall. How's it going?
Good, Mike. How are you this morning?
I am awesome today.
Good.
Just awesome.
Good. Me too.
So let's talk a little mortgage and business, and we've always got all the best products and financing options and all the best interest rates with you guys.
Right.
So what's the latest scoop today?
Well, today I thought we would talk about something we haven't talked about before, and that is possibly some of our investors out there that have multiple financed properties.
Okay.
So for the longest, the maximum financed number of houses that you could have financed was 4. But there is now a product, it's been out a little bit, but there's now a product where you can finance up to 10 properties. That's not the number of homes that you own. You can own more than that.
Right.
But if you have an open mortgage, you can have up to 10, including the one that your new one that you would be doing.
Right.
So I kind of wanted to just touch on that real quick, in case
Okay.
we have some investors out there that are listening to us.
Yeah, absolutely. That sounds good. And oftentimes this is great to talk about because so many times investors kind of get, relegated to the secondary market, if you will.
Right.
The private market or the hard money market. And maybe they don't always get, the best, bang for their buck. And so now to maybe have a little bit of competition, maybe some other options for maybe that smaller investor.
Right.
We're talking, not talking about the big guys, but the smaller guys. And oftentimes they get so taken advantage of, if you will.
Right. They do with those hard money lenders because the interest rates are terribly expensive.
They are.
And then you have to refinance in a short amount of time. They're not going to finance your loan for very long at all.
Right. They're generally interest only, and it's great if you need to get into a property.
Right.
But getting out. So this is great. I'm excited to hear about this.
Right. So even if you have one of those products, we can use this product to refinance you.
Get you
into
out.
one of our products. Yeah. So maximum loan to value, you have to have 15% equity or down in the property to be able to utilize this product. And what I want to talk about is this particular product is for the 7th through the 10th home that you're purchasing. So if you already own 6 properties, you would be this product if you're purchasing another, going into the 7th. And the borrower eligibility, if it's multiple borrowers, they're going to count all of the open mortgages between both of the borrowers. So if one borrower has 3 and another borrower has 3 and they're buying another one together, even if they don't own those properties together, this one would be together, so it would be the 7th. Okay?
Got it.
So again, we have to have a 720 credit score and at least a 15% down or at least 15% equity if you're refinancing.
Okay.
And that's on your second home and on your 1 to 4 unit properties, because we've talked about buying like duplexes and things. Mm-hmm. So if you're buying a 2 to 4 unit product, which is, again, a duplex, you have to have 25% down. So that's a 75% loan to value.
Okay.
But what I thought was really interesting is we can go up to a 55% debt to income ratio. And that's important on this product because the way your cash flow is doesn't always equal what it looks like on paper.
Right.
So when we determine what your qualifying income is or what your qualifying net rent cash flow is from your other properties, that may be less than what you're actually thinking that it is. Mm-hmm. So we can go up to a 55% debt to income ratio on this particular product, which I think is really important.
Yeah, it is, and that's very helpful.
Right. And so then we need reserves, obviously, with every product that you have. like
Sure.
this, you're going to have reserves. So they're going to look, and it's going to be ran through the automated system, and the automated system is going to tell us how many your particular loan, how many months of reserves we're going to need. And reserves, by the way, if you don't know, reserves are money that you have in the bank or a 401k or any type of savings account, money market, anything like that, of your monthly mortgage payments, this home as well as the other homes that you own. You need to have a certain number of months to cover those mortgage payments. That's a reserve. Okay. I don't think we've ever given the definition of that.
Yeah, we
kind
of assume people know that, so it's good to explain it to them.
Right.
Absolutely.
And so interested party contributions, seller paid closing costs. You can have those on this product because it's an investment product, and a lot of investments you can't really have that. But because of the loan to value that we have with this product, you can. If it's a second home, if this is a second home for you, you can have up to 9% seller contribution. And if it's an investment property for you, you can have 2% contribution from the seller.
Okay.
Those contributions cannot go towards satisfying your reserves, though. Okay. So underwriting. Again, we talked about that this particular product is for the home number 7 through 10. This applies to the total number of properties that you have financed, not that you own. We can't have any bankruptcies or foreclosures in the last 7 years. No delinquencies, 30 days or greater, within the last 12 months on any mortgage debt at all. Out of all those mortgages that you have,
right.
You can't have any in the last year. No 30-day lates. Rental income, we're going to have to, because if you're purchasing house number 7, you have rentals. So you're going to have to support that rental income with 2 years tax returns, or for the length of time that you've owned the property if it was less than 2 years. So if you've only owned the property for a year, we're going to look at the last year's tax return and do the cash flow based on that.
Okay.
All right. Supreme Lending will only finance up to a maximum of 5 products and up to $2 million. So you can have other products. You just can't have all of them with Supreme Lending.
Okay.
Okay. So if you have other mortgages with other lenders, we can do up to 5 more through our company.
Okay.
Yes.
Very good.
Okay.
Well, definitely a great option, and like I said, the smaller investor often doesn't get the best deals.
Right.
Because they probably already have a home that they live in, and so that next one it's going to be more than likely that 20% down. Sometimes there's some other options, or maybe they go hard money, go private lender, go to that secondary market. But at least, you guys give some additional options for that smaller investor. So, really folks, no matter where you are in that area, if you are already up into that 7th, 7th to 10th, or if you're somewhere south of there just looking for your first investment property, Supreme Lending's got a lot of great options for that smaller investor.
We do.
So highly recommend, giving Terri a call and to go over all of those options.
Right.
Because you're definitely going to be far better off with Terri than with either the big box lenders or who aren't going to really want to talk to you anyway.
Right.
What? You want a second home, a second mortgage, an investment property? We don't really want to talk to you about that.
Because there's a lot of people out there, a lot of lenders out there that don't really know anything about doing an investment mortgage.
Right.
So you definitely, when you're calling and you're shopping, get a feel for who you're talking to. If they sound like they don't know what they're talking about when it comes to your investment purchase, then immediately disconnect from that conversation and give me a call. We've done lots of investment transactions through our office, and I kind of like them.
Yeah, and you got to remember, investments are investments, and they can, if you don't get with the right partners to finance your investments, things can go south for you really quickly.
Very fast.
I mean, how many times do I come across foreclosures where somebody tried to buy an investment property and they did an interest only, and then they weren't able to either do what they needed to do. Either they bought it for a flip and weren't able to flip it in time and get all the construction work done in time, or they bought it to rent it and weren't able to rent it in time, and they went with some hard money interest only, and then boom, boom, they had to walk away from it, and then it became a foreclosure.
Right. Because a lot of people think that they can do that. They watch these TV programs
They sure
and
do.
they think, oh, if he can do it, I can do that.
Yeah.
And it's not as easy as they make it look on TV.
Yeah, you need to have your ducks in a row, and trust me, what looks like a good investment with the wrong financing options to finance that investment can go south real quick.
Yes, sir.
So highly recommend giving Terri a call over at Supreme Lending. Terri Wagner's her website, by the way, terriwagner.com.
Yes.
And all right, well, very good. That's some good info.
Thanks, Mike.
All right. Well, we'll see you next week.
Yes.
Hey, folks, Inside Real Estate, Mike Kruizinga, come on back in a few. With over 3.5 million square feet and 5 DFW locations, Ideal Floors has you covered for all your flooring needs. Whether you're looking for carpet, tile, laminate, wood, or vinyl plank, Ideal Floors has you covered. And with their price match guarantee and their 100% satisfaction guarantee, they are the absolute best in DFW for all your flooring needs. Call Kevin Hamus, the owner of Ideal Floors, at 214-789-0422 or go to idealfloors.com for all your flooring needs.
Not available in all states.
Hey, you two, what brings you to the mall?
We're just here checking on our robot.
Your robot?
Our recent Irvy's Froyo robot. Diane and I became franchisees last month.
It serves frozen yogurt creations to customers in 60 seconds.
Recent Irvy's provided us with everything we needed. They even help you secure amazing locations. Movie theaters, grocery stores, college campuses, theme parks. They make any location a sensation.
How do I get a Froyo robot of my own?
Just go to froyofranchising.com and enter promo code 5858. But hurry, because they're going fast. froyofranchising.com, promo code 5858.
What is it about buying a mattress that leaves you feeling violated? Pushy salespeople, fake sales, the walk of shame out of the mattress store? Those days are over. Hi, I'm Christian von Rickenbach, co-founder of Helix Sleep, where you can buy a mattress online, customized for you, for hundreds of dollars instead of thousands. Go to helixsleep.com, answer a few simple questions, and we build you the most comfortable mattress you'll ever sleep on. Shipping is free, and you have 100 nights to try it out. Go to helixsleep.com/talkradio and get $50 off your order. That's helixsleep.com/talkradio.
Now back to Inside Real Estate. Here's Mike the Realtor.
Hey, folks, we are back. Website, InsideRealEstateRadio.com. Check out the website, InsideRealEstateRadio.com. Hey, now it's time to do a little bit of legal analysis. We've got our legal expert, Perry Cockerell, here in the studio. His website, PerryJCockerell.com. PerryJCockerell.com, and also the author of A Private War. And by the way, A Private War has also been separated out into a 5-part series, and the very first volume has just been released on Amazon, so check it out. A Private War on Amazon.com, and actually he's working on the sequel as well. So very cool. Perry, how are we doing today?
Doing fine. Thank you, Mike. Nice to see you.
Good to see you. And, we alluded to earlier in the show how important title insurance is going to be. And so let's kind of get into some of that and talk about, a little bit of the case law that is why it's so important.
I do want to mention that, of course, if you have a loan from a lender, title insurance is going to be required anyway. And you see it just in most transactions. I can't even think of one where they do not take it out for one reason or another, but
pretty rare, yeah.
And things come up, but there's some types of transactions that you really will be glad that you have that, because there's some that are not fixable, and there's just going to be a title insurance policy that'll pay a claim in the event that title fails. And there's a lot of things they can do after a claim's made. The company will hire an attorney that represents you in court, and they do their best to cure that title defect. And that's what I do for a large amount of cases for a number of title insurance companies. But some of these are just transactions that they're not fixable, and they're ultimately settled out of court in a way that's satisfactory to all the parties. And I've just been through some experiences like this in the past, and it's even in cases where the seller or the buyer, rather, and even the lender, representing both of them, have basically done everything they're required to do. And the title company, for one reason or another, fails to pick up the fact that there's a real defect going on here. And so that's what I've seen. And what the concept I'm going to bring up today is receivership. It sounds boring, but it isn't.
Right.
It reminds me that the U.S. Senator John Tower, they used to say his name is Tower, but he don't. But receivership sounds boring. If you're going to go to sleep, let me tell you, it is not.
It is not. And you should listen to this, because this is a situation that, got some folks in some very desperate times because of, this type of issue. And, look, title insurance is going to cover you for those title defects that the title company does not pick up. And in so many cases, the title company only researches the county in which the property exists. And oftentimes things are processed in other counties, which can cause issues. Look, folks, there are so many things that can go on when buying a property, and any type of property. And so that's why you want to be covered. So let's talk about this receivership.
That's what's seems a real problem. But the Supreme Court answered this question years ago in the 70s, and that's just where a receiver was appointed in a case. It was under a will, and the property was foreclosed on a couple of months after the receiver was appointed, and there was no what they call lis pendens filed in the county where the property was located, and the Supreme Court said the receiver doesn't have to do that. Now that's why it wasn't picked up, or in other cases that's why it's not picked up at the closing. This concept applies even if there's no indication of it of record. And that sale is void. In other words, it can't be fixed. So typically it's settled out of court. And this is why you would need title insurance. It picks up that unknown quantity like that. And I've just been through several of these where this happened, and the seller is just at a loss. What did we do wrong? You didn't do anything wrong. What did the title company do wrong? Well, they didn't pick it up. And particular ones I've seen, there were actually indications of record on those. So this is very unusual. But here's where you see it, and this is what's vogue, and that's why I have like a handful of cases just within the last 2 months. Total 1, 2, 3, 4. We're not going to go all of them, but I'm going to tell you where it's coming into play. Is a lot of people who sell property actually have maybe a judgment debtor. They owe somebody some money, and that judgment's been reduced by a court. And what judgment creditors are doing is they're going to court and they're asking for the court to appoint a receiver, and the receiver can take all the judgment debtor's non-exempt assets and sell it. Sounds good for the judgment creditor.
Mm-hmm.
The downside is that the cost of that receiver, if it's a lawyer, can what they call spin out of control, and that attorney will charge by the hour and can spend extraordinary amounts of time going after property which he's not even certain exists. But when he does, then you're really stuck. You can't sell the property until you satisfy this receiver claim. And so the other area where you see it is in divorce. The parties are going through divorce. They want to prevent the home from being foreclosed on because they can't pay the mortgage. And you see the court appoint a receiver there. The other is under a will that has a trust, and for some reason or another, the trustee is doing improper activities such as conveying property to somebody that's not under the will. Then a beneficiary can have a receiver appointed. The other is where partners own property jointly. Another is where, let's say, a bank is foreclosing on a lien, and you see just hundreds of foreclosures at the courthouse steps. They also have a right to have a receiver appointed and might do that in some very sophisticated cases. Though they do that in cases where you have large real estate projects that might be failing, such as apartment complex, construction projects. They'll put those under receivership. But interestingly, what is not available under the law is, let's say you're a debtor under your home equity loan or your residential mortgage. You don't have a right to just, if you're under foreclosure, you don't have a right to have a receiver appointed, although it would make sense. It could stop that foreclosure.
Stop foreclosure, yeah.
It could protect your equity, and that remedy is not available in the law. It's been carefully crafted out of there. It's only available for the lender, and the lender's not going to do that because the receiver costs a lot of money.
Mm-hmm.
I think it might be something to look into because there's so many foreclosures of home equity loans going on. There's so many foreclosures of home mortgages. If the mortgagor, being the borrower, could just ask the court to appoint a receiver, that would stop that foreclosure, protect the equity if there's equity.
Right.
And then that property could be sold. Rather than appointing an attorney to sell that property, what they should do is appoint a real estate agent. And that's what I do in these cases with receivers, is that you might as well get a real estate agent. They know what the market is. A lawyer's not going to. Mm-hmm. He or she is going to charge a fee, which is the typical commission fee, which we already know it is because it's in the contract.
Right.
Whereas an attorney is going to keep an hourly rate.
Billable hours.
And it could just, as one judge said in one case, spin out of control.
Right.
Some of the judges do not like receivership, and they will not appoint them because of that problem. It creates, in effect, a judicial officer out there who has immunity and can just escalate the costs of the case beyond your imagination. So the other option is if someone is being foreclosed on under their home equity loan or their residential, really all they can do is reinstate it, work with the lender, or they typically go file bankruptcy, Chapter 13 for the most part, if they want to keep that mortgage. But just imagine if there was a scenario under the law that allows you, as the mortgagor, to file a proceeding to having a receiver appointed, nothing more than a real estate agent. That would stop that foreclosure. I'm sure you see some resistance to that by the financial industry, because that could run up the costs of the sale. But anyway,
but it would be consumer friendly because it would, help save any potential equity, in the property. I mean, if they really are underwater. And so it would, you're right, there would be a simpler process to doing this versus going through what the lenders currently do.
I think so. I'm actually going to contact one of the state senators, maybe both of them, and just propose this. I went through the receivership statute, noticed where the ability to get a receiver was limited to the mortgagee, the lender rather. Just needs to add a word, mortgagor. And I'm certain that they've been through this years past, and there was probably resistance to that. Mm-hmm. And anyway, where it's important is sometimes you just don't know that your seller is under receivership. And in this particular case, the one I handled, the seller just basically lied. They signed they signed a document that said it wasn't under receivership. And I'm just amazed that, as you mentioned, as you remember last month, I showed you 3 fraudulent transfer cases. The legislatures also said that if a sale is a fraudulent purchase like that, you can have a receiver appointed to set aside that fraudulent sale. But you'd just be amazed. And so I have here, and I won't go through the cases, but here's 4 cases in the last 2 months where a receiver was appointed in a divorce case, a business case, a state case, and 2 judgment creditor cases. One of the complaints on appeal was that, wait a minute, we don't want this receiver. We can just have the sheriff sell the property, and he doesn't take his commissions somewhat like a realtor. Why do we want to pay this huge lawyer fee? And so that's a big downside complaint to that. So bottom line, how do you protect yourself on a case like that? You probably cannot. If your title company can't pick it up, I'd be very surprised if you're going to pick it up unless you just have a lot of independent knowledge about the seller. And that is one of the benefits of having a title insurance, because some of these properties are very valuable. And if you didn't have that, you would not be able to sustain the costs of trying to undo this or protect yourself in a case like that.
Yeah. When it comes to receivership, it's something that you may not, your agent, if you're using a real estate agent, and then the title company. And the title company, they have processing plants, and that's all they do is just process title work. I mean, this is their job, and they do a thorough job. They do a very good, very thorough job. A gazillion times out of, almost a gazillion. But there are those times where they do miss it. And in those cases, it's so important that you have it. And like you say, if you've got a mortgage on the property, it's going to be mandatory, so it's not really your choice. But if you buy a property cash out, and you're thinking, well, I don't want to do that. Yeah, especially if you buy the property cash out because you're putting all that equity into it.
I would like to know what people think. So if you get a chance to go to my website or see the phone number, I would like someone to give me some feedback. Call or post a note. What do you think if the mortgagor, that's the borrower, that's you. Let's say you get down, you can't pay your mortgage, you're going through a divorce, something happens, you want to protect that equity. What do you think about being able to ask for a receiver, which is nothing more than a real estate agent, if you think about it, the bank forecloses on the property. What do? They eventually sell it. What do they give it to a real estate agent. They sell it at some point. Why not sell it right up front if there's equity, that is, and protect it right there? I just think that would be and think how many bankruptcies people would not have to file Chapter 13. Principally, they're filing because they can't keep their mortgage current. So imagine how many bankruptcies that would avoid if people could just limit the issue to that piece of property and then not having to expose their entire.
And it would get rid of the potential loss for liquidity that that owner has. So
certainly,
I think that would be great. Well, go to perryjcockerell.com, perryjcockerell.com, connect with Perry, and give us your feedback on that. Hey, folks, we're back in 2 weeks from now. We're not coming in this next week for Thanksgiving. We'll be back the next week, so tune in for us then, 8 to 9, almost every single Sunday. InsideRealEstateRadio.com is the website. And, hey, folks, have a great Thanksgiving. We're out of here.
If you have a timeshare, this time of year you're probably thinking about those maintenance fees coming due. Hi, I'm Karen Holloway, owner of Lone Star Transfer, located right here in the DFW area. Before you pay your maintenance fees, call us for a free consultation, 972-722-3166. We'll get you out of your timeshare and put a stop to those maintenance fees, guaranteed. 972-722-3166 or LoneStarTransfer.com.
If you're stuck in traffic, so are others. Give us a heads up. The KLIF Traffic Tip Hotline, 214-765-5299.
The Richard Tonica Insurance Agency in Arlington has nearly unlimited resources when it comes to getting you the best insurance rates and policies for home, auto, and more. As part of the Goosehead Insurance brand, you, the consumer, have the power of choice through the Richard Tonica Insurance Agency Network. Richard can quote over 20 A-rated companies to find the best fit for you, the best policy at the best price. Call Richard today at 817-286-2002. It's the Richard Tonica Goosehead Insurance Agency, 817-286-2002.
KLIF News and Information 570. Every day, we keep track of the kinds of news stories that matter, stories that make a difference. We're doing it all from the Nerve Center of Dallas, Victory Park, right next to the American Airlines Center. With our 24-hour newsroom, reporters on the scene of breaking news, and talk programs that bring perspective, we build our broadcast day with you in mind. We hope you'll spend part of your day with us. News and Information 570, KLIF.
Neither the hosts nor the guests or contributors of the show Inside Real Estate with Mike Kruizinga are attorneys, CPAs, tax advisors, or investment advisors, and are not providing legal advice during the course of the show. If you need professional legal advice or services in any of those categories, please seek the appropriate professional. The host is a licensed real estate agent in Texas with the Chris Arnold Premier Realty Brokerage, a fair housing broker and member of the MLS. Texas real estate agents are prohibited from providing legal advice.